Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 22nd of July. So I've seen some good movements in a few of the key indices and also some of the key currencies that we look at each week this week. So it's been the first week of the earnings season in the US, so we'll jump into the markets and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, and look, yeah, we've seen a pretty positive week, really. Like, apart from this one candle that pulled back a little bit, which you'd expect, after 3 or 4 days of fairly bullish movement, has been very strong. And you can see that it is fast approaching a very important level. That look, the 69.90 to 70 cent level is a very, very important zone. I'll pop a line there. We'll put this across and I'll show you what I'm talking about. That is a very, very important zone for it. Now, it's just below the 70 cent, but close enough. It's really a zone more than anything else. And you can see that it's sort of, it's a bit past the 50% mark of the little mini channel that's formed here. Well, it's not really a channel, but it's a support and resistance zone that you can actually really see that we've got a lot of price action inside it. Like, we've effectively traded in that zone for nearly a whole month. So we know that it's fairly important just by the fact that it's been there for quite some time. But now it is trying to bust through it, and it's moving fairly quickly. There are two ways that you can play this. Look, the MACD is definitely, signal line is definitely out of the histogram. There's no question about that. And you can see very clearly that it's broken well above the 20 moving average now and trading above it. But it does have the 50 moving average in front of it before the resistance even gets there. So it could have a little bit of trouble around this level, but more than likely, any sort of momentum continuation, we'll see it hit the 70 cent mark without much trouble, I wouldn't have thought. We'll go down to a 4 hour and a 1 hour just to see what you can basically, how you basically trade. You can see we've got a series of higher highs and higher lows. The things that we always talk about, they're always prevalent. And you can see the 20 moving average was your catalyst for the bounce off and now about to break a new high. So realistically, it's targeting this area and it's probably going to be seeing it difficult to actually stop before it gets there. So I wouldn't be looking at shorting opportunities just yet. 1 hour is very similar in the sense that, we're seeing a series of higher highs and higher lows. A little bit of a dip here lower, but realistically it's pushing up higher again. So my targets for this one are the 70 cent mark. I think it's close enough now that you can really trade it with a bit of confidence. If indeed it does pull back to the 20 moving average again and it's still sort of hovering around this level here, that wouldn't frighten me too much. I mean, you're only talking about 70 or 80 pips, so it's not like it's a long, big move anyway, but that wouldn't be a devastating move. I think if anything, I would be looking for reversal opportunities to actually long it from that point on anyway. So if we see any sign of weakness on the 15-minute or the 1 hour, and it looks like it's starting to lose momentum and weaken off, the target that we'd be going for on the short is a 68.50, and then at that point there would be looking for a reversal back up to the high. So there are a couple of ways to actually trade it. It's really about the price momentum. Just jump onto the momentum that's actually moving in the best direction for your trading period, and you'll be off. If we get a daily close below this level here, which is below the 68 sort of 50 area, a daily close there bodes very poorly for a move up, and then we'd be targeting the lows at around that sort of 67.20 again. That would not be ideal. I think that even with the dollar strength, as strong as it is, I think we can probably still see that movement hover in this area. But a close, like I said, we trade what we see, and a daily close below this level here, and we start to target the 67.20 area again. So pretty good trading on the Aussie. All right, we'll move on over to the US dollar CAD. And look, this one's played the game really nicely. Obviously hit the resistance that we know was there. It's come back down to the level where we fully would have expected it would have found support. And so far it has, okay? So we can see that we're hovering above the 50 moving average, even though we've broken below the 20. The 20 was fairly high up, and it's no surprise really here to see this breakthrough there. But this level here needs to hold up for this to be continuing its strength. Like, if we don't hold up at above the 50 moving average and at all of these zones right through here, we're probably going to be in a little bit of trouble on the CAD. And I think the next target down would be the 200 moving average, which is around that 127 level. So it seems like it's a long way away, but it can get there fairly quickly. So this level really has to hold up. So what we're looking for here, a change of trend on the smaller time frames, maybe a 1 hour series of higher highs and higher lows, and we can target up to the 130 again, which is about 120 pips movement, which is pretty good. Still scalping. We're not doing anything overly crazy on this one. We're still only scalping at the moment because we're not really seeing any big long-term trends breaking out. But definitely an opportunity to get back up to the 30 if we get a series of lower highs and lower lows. So, realistically, what we want to do, higher highs and higher lows, of course. So what we want to do, see, we've flattened out at that level here. series of higher highs and higher lows on a 1 hour and break of this zone, and we can start to target this move up. It's a pretty easy target to aim for. We know it's previous resistance, and you would be very brave to be trying to go past that. But with 120 pips up for grabs, or maybe 100 by the time the trend actually starts, there's plenty of room to actually get some good movement out of that. So yeah, pretty good trading on the CAD. On the flip side, of course, if we do break the 50 moving average, we can start to target the lows of around that 200 moving average, which is around the 127. That's pretty much where it's hovering now. That doesn't move very much, so you'd expect it'll be there for the next week or so, or around this zone. And that's a pretty reasonable level as well. I mean, you're talking about, by the time you get the break, probably about 120 pips on the downside as well. So reasonable scalping opportunities on both sides of the CAD. It really just depends on what it does from here. But I think, really the support probably will more than likely hold, with the US strength being fairly good. We'll go to the dollar index in a second, but I would expect that this is the area that we're going to be filling probably before this area. But both of them are definitely viable trades, no question about that. All right, moving on over to the US dollar yen. This one's been behaving itself as usual. Still hasn't hit the 140 yet, but it's got very, very close. And yeah, really, while it's still making higher highs and higher lows, there's just no reason to think that it probably won't get there. You can see that it's been finding the support on the 20 moving average, and that's really our guide. While the daily is trading and closing above the 20 moving average, I think that we can basically stay very strong with this one, and yeah, try and push it up to the 140. As soon as it breaks this level here, which is the that 139.20 area really, or just above 150, just below 139.20, if we get a close above there, it's more than likely going to gravitate to that very important key number. It has to hold up obviously above the 20 moving average. I wouldn't want to see weakness here. A series of lower highs and lower lows would not be ideal, that's for sure. But realistically, while it's been holding up, there's no reason to think that it's actually going to weaken anytime soon. This has probably been the strongest of the dollar-based pairs anyway, because realistically, this hasn't had the bigger pullback like some of the other ones have. So really, if we hold up above the 20 moving average, if you want to scalp, we can basically go. What I like to do is know where the 20 moving average is, draw a line there, and then go to the smaller time frames, so you know exactly where we're aiming for. Okay, so we pop that there, and then we can go to the smaller time frame when we know the base that we're talking about. So if you go to a 1 hour, there it is there. If we hover above this level here and see a series of higher highs and higher lows, we know that we can start aiming for the longer term move up. And when I say longer term, I mean the uptrend. But in the first instance, this is the level that we're going to be targeting, the 139.20 area. You might as well go for the easy pips, because they're going to be the easy pips. If it starts to move up and the momentum starts to shift to get it up again, this is going to be the easy trade. Breaking this part is going to be the hard part. So if you want, you can break your trade down to 2 attempts. The first one will be to get it to this level here, and then you can either leave some on or actually start a new trade and push past that one and try to push onto the 140. A break of this level on a daily candle, and then we start to look for shorts again. But until that happens, I'm not really interested in the short. We've got to stick with the trend is your friend mentality, and we know the uptrend, the prevailing uptrend, is still long. So we're looking for long scalping opportunities on the smaller time frames from around this level up to the 139.20 in the first instance, and then onto the 140 if that level gets broken. So 2 targets to go for on the yen. Okay, we'll move on now to the dollar index. So look, this has been pretty good. We'll take it to the bigger time frame first. We'll go to the daily, and as you can see, nothing's been stopping this juggernaut really. Higher lows all the way. The lows have been on the 20 moving average and bouncing off them. This is going to be a test. We're on the 20 moving average now, and we have seen some weakness. We hit a relatively fresh high there at 109 exactly. It's pulled back pretty aggressively now. We're sitting on the 20 moving average. This is the time for it to either continue on or break down. If it breaks down from this level here, the first target we're going to be aiming for is around that 105. You can see that we've got the previous highs there. That's going to be a natural roll reversal zone for it. So if it does break the 20 moving average, our target's going to be effectively the 105. But if indeed the 20 moving average holds up, the first target's going to be effectively the 108, the low 108s first, and then at an extreme, the 109. Of course, the euro is the one we really want to focus on there, because that's the easy short. And as you can see, from a technical standpoint, it's been fantastic. It's been respecting the moving averages all the way through. You can see here that we had that little mini zone where the 20 moving average did hold it up. But again, this is very similar to the dollar index, except in reverse, of course, that while it's trading under the 20 moving average, we're just remaining short. So if we do get a close above the 20 moving average on the daily on the euro. The first and easy target is going to be that 103.80 to 104 level. So a pretty easy zone to aim for. If it gets a close above the 20 moving average, it will just get there. So because the momentum will shift it and push it up there. So realistically, if we spin around here and lose momentum, the dollar index picks up off the 20, you're going to start targeting the lows again at around the parity level or the 100 and .50, which is a pretty easy sort of trade. That's the first trade that you'd be basically taking, but you need to see that zone broken. I'll go on the 1 hour to show you that zone a little bit more clearly. This zone here needs to be broken for that to happen. So if we get a series of lower highs and lower lows and a close below this level here, which is around the 101.80 level, then we can start targeting the 150 level. So that's pretty much the easy trade on this one. But if it does go long, again, it's a pretty easy trade as well. If it does break and close above the 20 moving average, it's a very easy aim for the 103.80, which is the most likely target because that's going to be your roll reversal zone. So very, very straightforward trading on the euro. And hopefully you've been able to catch some of these moves because they have been fairly consistent with what we've always talked about and behaving themselves very, very well from a technical standpoint. So on to our last one, the S&P 500. Look, we know we're in the middle of earnings season. We're not in the middle. We've only just started it, actually. But, 1 week in, and the results have been in line or better than expected, which, of course, has seen the market move and react in a positive way. We've seen a very strong week, really. And, it's doing all the right things for a potential move to the 4100. This is the 4150, actually, is the level that I've really probably set for it. If we get to this level here, let me just draw it up properly. This is the level that I'm talking about because that's a roll reversal zone, okay? And roll reversal zones act as a magnet, really, when they come through. You can see that we've got a series of higher highs and higher lows already. You could also argue and make a pretty strong point for a double bottom in the direction of the new trend, okay? It's not a bad thing when a double bottom forms after a previous low. It's not the end of the world. A double bottom doesn't have to be the absolute low trough. You can have a double bottom in this scenario as well, where a trough has been made that's lower. And you can see the big kickbacks. Most of the kickbacks on this chart are from the downside. And what I mean by that is the sellers are the ones losing the war at the end of the candle. Okay, so this is obviously a daily chart. At the end of each day, although it's quite wicky down here, all the wicks are to the downside, not rarely to the upside. Most of the time, the candles are closing at the highs, okay, or close to the opens or the highs. So that means that the momentum is well and truly with the buyers, and the sellers are losing the war nearly every single time on every single candle right through this area here. So we've got the break, and definitely trading above the moving averages now. The first an absolute solid target is going to be that 41.50. Yes, the 4,000 will be a little bit of a headache for it, but if the earnings season, it's been pretty good this week so far, if the next week or two continue to be good, you're going to see it trading around this level here. There's no worries about that because realistically, that's what's holding it up from really blasting off. Now, if it fails at this level and starts to turn around, we're going to be looking at a pullback down to the moving averages. We are governed a little bit by obviously earnings that we can't predict and don't really want to predict, but we have to be very, very mindful over the next couple of weeks that they are going to be impacting this market. But after a week of solid earnings results that have been in line or making the market fairly happy, the general consensus is going to be now that a week's worth of earnings is out of the way and it's been pretty good. We're probably going to see reasonable earnings for the rest of the period. So really, the highs are probably what we're aiming for. I think it's more than likely to be continuing long more than it is turning around and going short, unless something unforeseen, completely unforeseen happens. So that's the level that we'll be aiming for, around the 4150. And all you need to do is just go to the smaller time frames and trade the pullbacks. Pullbacks to the 20 moving average on the smaller time frames and aim for that level. But we are going to find a fair bit of resistance at that level, and that's where we're going to be looking at either taking profits or maybe even putting in some shorts when we see the momentum shift. All right, so pretty easy trading on the S&P as well. Failing that, again, like a daily close below the moving averages, and then we start to target the lows again. But that's looking less and less likely, given that we've seen a good week of earnings. So I hope everyone's had a great week's trading. I think we've had some really good moves. The market has been very, very technical, so you should have been able to get in and out very, very efficiently. Just be mindful over the next couple of weeks, though, that we are still in earnings season, and the market's going to be impacted by what happens. So far it's been pretty good. Just keep that in the back of your mind that we're not likely to see big breakout trends until we see a full earnings season out of the way. So have a great weekend, everybody. I look forward to seeing you all next week.